In this video, today we will talk about stock market analysis. Stock market analysis is a multifaceted process involving the evaluation of various factors to assess the performance and potential of individual stocks, sectors, or the market as a whole. This analysis typically encompasses fundamental, technical, and sentiment analysis, along with consideration of broader economic and geopolitical factors. In this video, we'll explore each of these components and their role in stock market analysis. Fundamental analysis. Understanding the value. Fundamental analysis focuses on evaluating the intrinsic value of a stock based on factors such as financial statements, earnings, revenue growth, industry trends, and competitive positioning. Analysts examine key financial metrics such as price to earnings, PE ratio, earnings per share, EPS, price to book, PB ratio, and dividend yield to assess whether a stock is undervalued, fairly valued, or overvalued relative to its peers and the broader market. Furthermore, fundamental analysis involves qualitative assessment of factors such as management quality, business model sustainability, regulatory environment, and market dynamics. By analyzing these fundamental factors, investors can make informed decisions about which stocks to buy, hold, or sell based on their long-term growth prospects and intrinsic value. Key aspects of fundamental analysis include financial statements. Fundamental analysts study a company's financial statements, including the income statement, balance sheet, and cash flow statement, to assess its financial health and performance. Valuation metrics. Fundamental analysts use various valuation metrics to determine whether a stock is trading at a reasonable price relative to its intrinsic value. Common valuation ratios include the price to earnings, PE ratio, price to book, PB ratio, price to sales, PS ratio, and dividend yield. By comparing these ratios to historical averages, industry peers, and the overall market, analysts can assess whether a stock is overvalued, undervalued, or fairly priced. Growth prospects. Fundamental analysis involves evaluating the company's growth potential based on factors such as industry trends, market demand, product innovation, and competitive advantages. Analysts assess a company's ability to generate sustainable revenue and earnings growth over the long term, which is crucial for driving stock price appreciation. Management quality. Fundamental analysts assess the quality and competence of a company's management team in executing its business strategy, allocating capital effectively, and creating long-term shareholder value. Factors such as management experience, corporate governance practices, and transparency in communication are considered when evaluating management quality. Technical analysis. Technical analysis is a method of evaluating stocks and predicting price movements based on historical price and volume data. Technical analysts use various tools and techniques to identify trends, patterns, and trading signals in stock charts, which can help them make informed trading decisions. Key aspects of technical analysis include price charts. Technical analysts study price charts of stocks using different chart types, such as line charts, bar charts, and candlestick charts. They analyze patterns and trends in price movements over different timeframes to identify potential buy or sell opportunities. Technical indicators. Technical analysts use a wide range of technical indicators to analyze price data and generate trading signals. These indicators include moving averages, oscillators, relative strength index, RSI, stochastic oscillator, momentum indicators, moving average convergence divergence, MACD, and volume-based indicators, EG, on-balance volume, OBV. By combining multiple indicators, analysts can confirm trends and filter out false signals. Support and resistance levels. Technical analysts identify key support and resistance levels on price charts, which represent levels where buying or selling pressure is likely to emerge. These levels are used to set entry and exit points for trades and to manage risk by placing stop-loss orders. Chart patterns. Technical analysts look for recurring patterns and formations in price charts, such as triangles, flags, head and shoulders, and double tops and bottoms. These chart patterns are used to anticipate potential trend reversals or continuations and to identify trading opportunities with favorable risk-reward ratios. Market analysis. Market analysis involves assessing broader market trends, economic indicators, and geopolitical developments to understand the overall direction and sentiment of the stock market. Key aspects of market analysis include economic indicators. Market analysts monitor a variety of economic indicators, such as gross domestic product, GDP, growth, inflation rates, unemployment rates, consumer spending, and industrial production, to gauge the health of the economy and its potential impact on corporate earnings and stock prices. Positive economic data can boost investor confidence and drive stock market rallies, while negative economic data can lead to market sell-offs. Interest rates and monetary policy. Market analysts closely follow central bank policies, interest rate decisions, and monetary stimulus measures, as these factors can influence borrowing costs, investment decisions, and equity valuations. Changes in interest rates and monetary policy can affect stock prices, bond yields, and currency exchange rates, leading to volatility in the financial markets. Geopolitical risks. Market analysts assess geopolitical developments, such as trade tensions, political instability, and regulatory changes, which can impact investor sentiment and market volatility. Geopolitical risks can create uncertainty and market turbulence, leading investors to reassess their risk appetite and investment strategies. Sector analysis. Market analysts analyze the performance and prospects of different sectors and industries within the stock market, taking into account factors such as sector-specific trends, competitive dynamics, and regulatory environment. Sector rotation strategies involve shifting investments between sectors based on their relative strength and outlook, as different sectors may outperform or underperform depending on economic conditions and market sentiment. By integrating fundamental, technical, and market analysis, investors can develop a comprehensive understanding of individual stocks, sectors, and the broader market, enabling them to make informed investment decisions and manage risk effectively. It's important to note that no single analysis method guarantees success in the stock market, and investors should consider a combination of approaches based on their investment goals, risk tolerance, and time horizon. Additionally, staying updated on market news, corporate earnings reports, and global events is essential for making timely and informed investment decisions. Stock market analysis is a comprehensive process that involves evaluating fundamental, technical, and sentiment factors, along with consideration of broader economic and geopolitical context. By integrating these various components, investors can make informed decisions about stock selection, portfolio allocation, and risk management. While no analysis can predict market movements with certainty, a disciplined and analytical approach can help investors navigate the complexities of the stock market and achieve their investment objectives over the long term. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.